In today's video, yet another Toronto real estate market report, namely the TREB resale market report. We have the full set of numbers for the month of November that was. I'm going to take a look at the major trends within the Toronto real estate market and the GTA real estate market. As interest rates have gone up, where have we ended up in November as we close out 2022 with regards to the Toronto and GTA real estate market? All this and more in today's video. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, back with another video for you guys here today. If you're new to the channel, welcome. My name is Sam, a Toronto real estate agent working within the Toronto and the Greater Toronto area. On this channel, we like to discuss all things Toronto real estate market oriented, market stats, market reports, market facts, building reviews, buyer advice, seller advice, and so much more. So as always, if you find this content informative, feel free to subscribe, and you can find my contact information on the screen and in the description box with regards to where you can get in touch with me and where you can find me on other social media platforms where I post short form content that's different than what I post on YouTube. Anyways, enough of all that. Let's get to the point of today's video, which is, as always, yet another Toronto real estate market report, namely the TREB resale market report. And we have a lot of interesting data to go through. Let's, as always, start with the most major categories and trends, and then we'll break it down into further detail towards the end of the video. Starting out with the average selling price across all property types across all areas within the Greater Toronto area, we see an average price of $1,079,000, which represented a drop of 7% year over year. So this is comparing November 2022 to November 2021. Because last year, November of 2021, as we see, the average selling price was at $1,162,000. So the 7% year over year drop in price is the largest year over year drop in price we have seen since the Bank of Canada started increasing interest rates and the Toronto real estate market started to cool down. Over the course of the summer months, it was pretty even year over year, maybe a 0.5% drop year over year or a 0.5% increase year over year. But as we approached the fall market, we started to see the year over year drop in prices increase more and more to the point where we see a 7% drop year over year. Now, what about month over month? Well, month over month, we see a drop of $10,000 in average price, because in October of 2022, the average across all property types and all areas was $1,089,000. So just a drop of $10,000, which is nothing to sneeze at. Yet you have to understand that a drop of 10,000, when we account for every single property type, every single sale across every single area, is very minuscule in nature. So although it's not fair to say we're even with October, prices are surely down since October, but when we take a look at this macro scale, prices are only down a minuscule amount, which in this case, once again, is $10,000. However, what is far, far down, far more than average selling price, is the number of sales that occurred in the month of November 2022. That's right, when we take a look at the total number of residential transactions that occurred, we see nearly, not quite, a drop of 50% year over year, wherein last year in November of 2021, we saw a total of 8,900 sales occur in November. Now, this November 2022, we have only seen 4,500 sales. And this, better than any other category, can really show us where the market is at right now. Sure, inventory is down, as we will get to shortly, but inventory is not down to the tune of 50%. The fact that there are less properties coming onto the market available for sale surely contributes to the drop in sales overall, but not that much. More so, what is contributing to the drop of sales is what we've been discussing on this channel for the longest period: an increase in interest rates that has caused a significant portion of buyers to shift towards the rental market. Another significant portion of buyers have decided to wait because it is a reverse of the hot market, in the sense where buyers think as they wait longer, prices will keep dropping more and more. And to a certain extent, that's not inaccurate, right? Of course, it really matters which particular sub-community and sub-market you're looking at. But overall, with about 90% certainty, I can confidently say prices will drop further into 2023. Now, whether that's the best buying strategy for you or not is a separate question and has more to do with whether you are an investor or an end user, but that's a separate discussion. The significant drop in sales has to do with the fact that demand is truly diminished and the supply that exists, although once again, yes, supply is diminished a little bit, it's just simply failing to sell. We see a lot of terminations occurring on the selling side, and we see a lot of suspensions occurring on the selling side and a lot of relists occurring on the selling side. And furthermore, not only are sales down year over year, but sales are further down month over month by a factor of 400, because in October of 2022, we saw a total amount of 4,900 sales, which for October was also very low. And if I recall correctly, also nearly 40-50% down year over year. So there has been a slight drop month over month and a huge drop year over year. But I touched on inventory, so let's get to inventory, because as I said, inventory is slightly down as well. In November of 2021, we had 10,000 total new listings come onto the market, whereas right now, as of November 2022, we only see 8,880 to be exact, representing a drop of 11% year over year. And even listings, even inventory was down month over month, because in October, we had a total number of 10,000 new listings come onto the market. And of course, now, as I just mentioned, we're looking at 8,800. So everything is really slowing down, winding down towards the end of the year. And this is somewhat seasonal. It's just not seasonal to this extent. Usually towards the end of the year in any given market, when we're looking at a hot market, moderate market, or in this case, we're looking at a very cool market, inventory does slow down. Sales slow down as well, but it's just not to this extent. That is what sets this current market apart from the seasonal trends we have seen on average in the last 5 to 10 years. And another key metric we can take a look at to further illustrate how hard it is for some sellers right now is the 33 days on market we are seeing, the average number of days of property staying on the market. Now, in a moderate market, you're usually looking at 20 to 25. In a very, very hot market, especially for instance, early in 2022, when things were staying on the market for only 9-10 days, that was really unnatural and not sustainable. Here, the 33-day figure represents a 83% increase year over year, because last November properties were only staying on the market on an average basis of 18 days, which is still relatively low. It's lower than what you have in a moderate market, indicating that last November was quite a hot market. And last November was quite hot. I mean, especially compared to today's market, this November. But things really peaked around February and March. Even though last November was a hot market, it was a moderate market compared to how crazy things got in February and March. And of course, January as well, but to less of an extent. Now that we have all the macro categories, the macro trends out of the way, let's take a look at the more specific, region-specific numbers. So what we have here is the numbers broken down by property type. On the left side are the housing numbers in terms of average prices broken down by property type on the vertical axis, and the exact location and type, so sales and average price, on the horizontal columns here. First, let's take a look at sales. We see that sales across all property types are down, whether in the 416 or the 905 and total as well. The biggest drop in sales really occurred with condominiums in the total, so both the 416 and the 905, so the GTA overall, where we see a year over year drop of almost 55%. The property and area that was impacted the least with regards to drop in sales year over year is the 416, so proper Toronto, specifically with regards to detached and semi-detached, represent the lowest drops of 40%. But keeping that in mind, we're saying the lowest drops of 40%. That's still a hefty drop year over year. But across all property types, sales are down. Now, when we move on towards average prices here, we see average prices are also down across all property types in almost all areas. With regards to condominiums, condominiums have clearly held up the best. Overall, condos are only down nearly just 1%. In the 905, they're actually up 0.3%, which is nothing. So they're pretty much breaking even year over year. And in the 416 proper Toronto, they're only down 1.5%. Whereas other property types here we see Detached down 11% year over year total, 10% down in the 905, 13% down in the 416. Semis down big in the 416 at 17%, and relatively large as well, with both 13% in the 905 and 13% total. Townhomes are actually also up as well in the 416, but in the 905 they're down almost 9%, and overall they're almost down 6.4%. And in terms of the percentage differences, here you see the price differences up here. Anyways, that is it for today's video, this edition of the Toronto Real Estate Market Report. We're gonna have more videos coming out during the week with regards to more specific numbers for condos, for detached, for downtown Toronto, Midtown, North York, Richmond Hill, and so much more. So as always, subscribe for more content on the Toronto real estate market with regards to market news, market trends, buyer advice, seller advice, building reviews, and so much more. Thank you very much for watching.